Good afternoon, Fabio Ronetti for Winston Capital, covering the week of January 6, January 10. As they say in Wall Street, as January goes, so goes the year, and as the first week of January, so goes January. So we have a good start. The Dow Jones for the first, year today. We have a funny thing because of the way a new year started. But Dow up 1%, S&P 107, and the Nasdaq 2.6%. But more interesting, something that we've been talking at the end of the year, the emerging markets. Unfortunately, Brazil is the only one down. She's down 2.5%. But Argentina's up, Mexico is up 3%, China up 3.7%, Russia up 4%. So clearly we had a good start of, an EEM, emerging markets is up 1.6%. So clearly, talking about this issue that emerging markets should have a good year. Clearly, on the week, the attention was on oil. We have the events, remember last week with Iran, then this retaliatory attack. Now it's coming up that there was, back channel communications that talks about, what happened, between the two countries. It seems like everything slowed down. Unfortunately, we learned that also this horrible accident with the Ukrainian jet crash was an issue of friendly fire. As we were not surprised because, as you can imagine, probably the Iranians were in full alert on, under possible attacks from the United States, and they shut down a commercial airplane by accident. So that we'll see what happens there. Let's move on to something else. Private equity. We've been talking about $1.5 trillion of dry powder ready to spend in things that might happen there or might work. Careful, we think that could be a bubble in the private equity world, so take care of that. The other thing that a lot of people are recommending is European banks. European banks are lagging the U.S., and also remember, the U.S. banks were very sleepy until we have the steepening on the curve around September, when the relationship between 2 and 10 started to indicate that there's not going to be recession. The difference between the 10-year and the 2, got bigger, meaning that banks, that borrow short and lend long were making bigger spread. So they had a rally, not the European bank. However, on valuation, the return on equity of the American banks is around 10 to 15%. The average valuation is 1.5 times book. The European banks are half of time book valuation, but the return on equity is 5 to 10%. So it seems to me they're fairly valued where they are. And the Europeans are struggling with this issue of negative rates. You are getting negative rates, and how can you pass the negative rates to your large customer clients that put deposits? You're going to return less money than they put you back, and how are you going to be lending now? So I'm still, concerned about that trade. European bank versus American banks. The champions of the online sales. We will start having real numbers now about what happened in the Christmas. More of that later. But all the first readings and colors, etc., are pointing to a great Christmas sales. Not surprising, the number one guy is Amazon. He has basically close to 40% from 30% in the last 3 years on retail sales. Second is eBay, just smaller, under 10%. But here are the surprises. Number 3, Walmart. They are really executing very well in their strategy to become an online player, still under 10% of market share. Number 4 is Apple. Not surprisingly, with all the gadgets that we buy from them, phones, tablets, computers, earbuds, etc. And then here's another surprise. Number 5, Home Depot. The home improvement place. So clearly a big race to just get online, combine online, offline, winners like Target, TJ Maxx, again, Walmart, Nordstrom. So there are players that clearly have adapted themselves very well to this new world that is coming. Another thing that we like, and we've been talking about, is ITA, the ETF of defense. Not because this Iranian issue, which we think will eventually disappear, but because President Trump has been insisting for their allies to basically up the spending on defense. For comparison, in the days of Ronald Reagan, the U.S. spent around 6% of their GDP in defense. Now it's around 2%, much lower. We don't have a Cold War, but the problem is like most of the European, Southeast Asian allies like Japan and Korea, South Korea, and some of the Middle East, people are spending way less than 1% of GDP. President Trump wants all their allies to up the ante and spend more. So we like ITA, names like Lockheed Martin, Boeing, Northrop Grumman, Raytheon, General Dynamics, all big builders of big green stuff. So that's something we think is a defensive play. You're not going to go very, very far, but I think it's going to be positive, especially if President Trump gets reelected. Go to emerging market, Argentina, huge expansion of the monetary base from the elections, from 1,500 billion Argentine pesos to 2 billion in a matter of weeks, basically. And, again, we hope that that doesn't go into hyperinflation. However, as you can expect, there's a lot of things there. Of the last week, the Argentine peso in New York went up 7% from 76 to 80. So we're careful of that. The government is trying to constrain how you can purchase dollars, and that will, usually is the driver to high inflation. But we'll see how it goes. New government in Argentina, usually new governments, the 3 to 6 months, especially after the crisis, are very challenging. There is a lot of rotation of ministers. We'll see what happens. We're looking very close. The market's doing very well since then, but we're looking into that. And then we finished the week with a great labor report. The number was 145,000, slightly below expectations, 160. But remember, November and October were super months with great, great numbers. Great. As we go into the earnings seasons starts on Tuesday with the big banks, JP Morgan, Chase, Wells Fargo. And now we're going to see the real numbers for the Christmas sales. Again, looks like Apple did very well, especially in China. Same with Amazon, same with Target. We will know for sure as they start reporting, mainly next week, not this week. So that's there. Then we will have CPI and PPI, 2.3 on the CPI from November, 2.1, and then from PPI, 1.4 from 1.3. Slightly changes, no big deal there. And then we will have retail sales. That's important because it's going to be December retail sales, which will be some correlation with the issue of Christmas. That's all. Let's have a good week for everybody. And remember, you can always get more information in our page, winston.capital. Have a great week.